Hi, and thanks for watching. In the last video, I discussed the full process of selling our shared ownership property. In this one, I'll be breaking down the various fees involved in selling. Bear in mind, this was our own case and yours may be different depending on the value of your property and for some services where you live, as different surveyors and solicitors and housing associations costs will vary. This is also not financial advice, it's just a rundown of some of the costs you may incur. So let's get into it. There were numerous costs which included survey, nomination fee, management pack, housing association solicitor fee, our solicitor's fee including legal costs, a mortgage repayment, and in our case an early repayment charge or ERC. Although this doesn't apply to everyone, it only applies if you are selling within the fixed term. So we'll firstly go through the costs without including the early repayment charge, and we'll then explain how the early repayment charge is calculated and add an example at the end. So if you're thinking about selling still in your fixed term, please watch until the end of the video. When applying, some of these fees were mentioned in the initial application document and correspondence. Firstly, there was the surveyor's valuation fee. We contacted various RICS surveyors listed and some were very expensive, so it is worth getting a few quotes. And for this, our cost was £270. One sizable fee was called the nomination fee. This is the cut taken by the party who is selling the property on your behalf, usually the housing association or an independent shared ownership nomination service provider. This fee for us was 1.5% plus VAT of the sale price of our share. As this was plus VAT, this means the total payable for this part was actually 1.8% of the price of our share. So, as an example, if your whole property is valued at £300,000 and your share of the property is 50%, your share is worth £150,000. This means the nomination fee at 1.8% would be £2,700. There was also something called a management pack fee, which is payable to the housing association via your solicitor. This came in at £250 plus VAT, so in total £300. As the seller, we were also responsible in part for the housing association's solicitor's fees, with our payable amount being £456. Of course, then there is the fee for your own solicitor, and for us this came in at around £1,605. This included legal fees of £635, a leasehold supplement of £185, a mortgage redemption fee of £195, fees for financial transactions in and out of £90 and £45, anti-fraud verification fee of £35, land registry fee of £75, £60 for file storage, and £18 for verifying lawyer bank details, and finally good old VAT of £267. Parts of the previously mentioned fees were paid in advance as follows: to our surveyor £270 before the application documents were sent, to our solicitor legal fee of £420 including VAT, management pack of £300 including VAT and also including disbursements of £72, and a solicitor portal fee of £354. So our total costs paid in advance were £1,416. As we decided to sell without porting the mortgage to a new property, the biggest payment of all was the mortgage redemption charge. This was the remaining balance on the mortgage. So in the case that you have £100,000 left on your mortgage, this is taken out of what you receive from the sale. So our total costs with this example are survey £270, nomination fee £2,700, management pack £300, housing association solicitor fee £456, our solicitor fee £1,605, a mortgage repayment of £100,000, which equals a total of £105,331. So, based on these costs and the share value of £150,000, proceeds the seller keeps is £44,669. Remember, if you have lived in a property as your main residence for the duration of owning it, you are not subject to capital gains tax. As we mentioned at the beginning, when you have a fixed rate mortgage, you are most of the time subject to an early repayment charge should you clear the mortgage before the end of the fixed term. With our particular mortgage deal, this was calculated as follows. Taking the mortgage balance multiplied by 1%, divided by 365, and multiplied by the number of days left on the fixed rate. So for example, if you have a remaining mortgage balance of £100,000, you would multiply this by 0.01 to get 1%. In this case, that's £1,000. Then you divide that 1% by 365 to get the daily amount. In this case, £1,000 divided by 365 is £2.73. Finally, you multiply the daily charge by the remaining number of days until your fixed rate ends. Note the fixed rate and the mortgage term are different. So if you took out a 5-year fixed rate with a 20-year term, exactly 3 years ago, your remaining number of days would be for 2 years, which is 730 days, unless it includes a leap year. So going back to the calculation, in this instance our £2.73 is multiplied by 730, which gives a total early repayment charge of £1,992.90. There may also be some interest to pay depending on your mortgage rate, which would be similar to what you pay in interest in a month. So going back to our previous example, if we add the ERC early repayment charge of £1,992.90 to the total, plus let's say a mortgage interest of £100, then our total that we would be paying would be £107,423.90. So based on these costs and the share value of £150,000, the proceeds the seller keeps in this case would be £42,576.10. I hope this has given you an idea of roughly what to expect in the costs when it comes to selling a shared ownership home, and in the next video I'll be talking about equity. If you found this video helpful, please delicately tap the like button, and if you are interested in the shared ownership process and property, please subscribe to the channel and click the notification bell for alerts to future videos. Thanks for watching, and I'll see you next time.